What's up, Jimmy? Good to see you.
And classical, that probably will never. Stocks may tank and the oil price may go down, but the gas price.
They're still gonna keep. Yeah, they're gonna keep those prices as high as they can until there's enough rising.
Exactly. I mean,
we need price controls.
Remember, guys, 2 years ago when I think it was the May 2020 front month went negative, the price. Well, did the price at the gas pump go negative?
Yeah.
Not gonna happen.
But we did get below $1 though. That's pretty nice, like having gas below $1 again. I think that's generational. I don't think it's gonna happen again. Well, if it does, I think it's it's like it's once in a lifetime kind of thing.
I'm trying to remember the year, and now I'm definitely showing my age, but there was like a couple of months where there were like gas price wars between like Esso, Petro-Canada, and I do remember prices going down to 38 cents. And everybody, like the companies were losing money head over heels. I'd have to look up like the month and the year. It's probably, I don't know, 10, 15.
38 cents. That's amazing.
Yeah. And so, it's like we're not far from 10x of that.
Yeah. No kidding. No, I can't even imagine 38 cents. That's wild. Yeah.
Sorry, this is investment calling. And I feel like I should be buying barrels of gas and holding on to them because
hiding them under your mattress at home. Is that how you do? You tell your wife or significant other, do not put any fire or matches next to the bedroom. It's like it's gonna explode. You got all this oil in her.
Just hold on, all flammable things away.
That's it. What's up, Matt? What's up, Adina? Sandro, how you guys doing?
Pretty good. Yourself?
Awesome. Doing good. Looking forward to buying some stuff on the cheap. That's the plan, anyways. Yeah.
Has anyone you kind of picked up some Bitcoin or Ethereum these last few days when it dropped? I have. I want to be for the long term. I have.
Exactly, the long term.
I couldn't help myself.
I have also. I have a. Yeah, I have an automated DCA thing that I just don't think about anymore. It just
nice.
Hey, look, it's down. Oh, look, it's up. Oh, it doesn't matter. Every day there's a little bit that it's in times like these where you try to automate away the emotion as much as possible.
Absolutely. Yeah. Don't make it discretionary, right? Don't like, I don't feel so good today. I don't want to buy anymore. It's like, no, remove the discretion.
Yeah, exactly.
Yeah, that's smart. Very, very smart. Yeah. I want to get started because we're like 10 minutes into the call. So I have a few slides prepared, but you know what? It's been like literally a month. I was looking at the previous slide deck that we did in May, and it's been exactly a month since we had our last AMA. And man, a lot has changed in a month. We knew we were in a bear market already, like back in May, but the velocity at which things kind of fell apart in the last 30 days plus days has been pretty remarkable. Even for folks who've been around, for one or two cycles, it's been pretty wild to watch and to participate in. So if it's not your first cycle, then it's been it's hard to have any relative gauges. But I think by most measures, it's except for Bitcoin. Bitcoin's actually not that crazy down this year. I think it's down like 50% for the year. I know it's down more than that if you take in the previous years, like the last years from the high to the low. But for this year alone, we'll talk about that in a few moments. It's not as down bad as some of these other altcoins, which are down bad. So yeah, let's get into it. So, but again, as I was saying, I really want to spend maybe more time today's call just talking to you guys and hearing if there's any questions or things you want to chat about, because it's been such a long time since we synced up. I think it'd be fun just to catch up and hear what your guys' experiences or what you guys are thinking about what you guys are doing now in the DeFi crypto Web3 space. So just a few slides that are prepared, and then we'll launch into things. Any questions before we jump into things as I get the slides ready, or comments?
Just thank you for organizing.
Yeah, it's been a while. Unfortunately, I think we all got really busy. Yeah, got really busy, and we're gonna try to get this thing going again. And I think now that we've kind of determined that Friday afternoons are kind of harder with the summer and the nice weather, we're gonna try to keep it this Monday schedule and kind of have this regular cadence, right? We'll try to keep it up going, and then obviously we're gonna try to set up the next in-person event for sometime in June again. summer vacations get in the way. Obviously, people are leaving and that kind of stuff, but we'll try to figure things out and try to get another get together, because that was a fun time last time we got together at Lakash. So let's get into the slides here, and I have a few prepared, but I'm going to try to breeze through them because, as I mentioned, I really want to spend the time chatting. So you guys all know me already. Everyone on this call knows me, so I don't have to spend too much time on that. Everyone knows Classicus. Does everyone know Kyle Classicus? Just want to make sure.
Yeah,
I think everyone on the call here is
still here. I still exist.
Yeah, still alive.
Sorry, I'm taking the train right now, so I have really patchy internet. Usually I'd have my camera on and hide all of y'all, but yeah, I'm barely probably audible right now. So thanks, Houston, for taking a little bit more of the lead here, but I'll be back definitely next week or in 2 weeks or whenever we do this next, because you guys know that once I start talking about stuff.
Yeah. No, thanks for tuning in, man. And where are you going? Well, you're on the train now. Where are you headed?
So I'm going to the Collision conference in Toronto. So I
nice.
left this morning from Montreal, and so yeah, gonna be in Collision all week this week. So if ever you guys are curious about something happening there, let me know or DM me or something, and I'll give you guys some scoops. So we'll be also taking some pictures and stuff. So if you guys are curious about what that looks like, it's just gonna be a lot of nerds getting together talking about a lot of fun stuff. So.
So what you're saying is the next AMA is going to be a report on the conference, right? That's what I'm hearing. That's awesome.
It's going to be a 150-page dissertation of my opinion on all the talks. Yes.
Yeah, definitely drop a stuff in the Discord if you have a chance.
On after
Yeah, but definitely, Kyle, if you get a chance, drop some stuff or some pictures or some commentary in the Discord. I'd love to hear how that event's going and the participation, that kind of stuff.
Yeah, I'm gonna try to selfie with Charles Hutchinson and Gavin Wood, but we'll see.
Oh, Charles there? Oh, I didn't know he was gonna show up. That's awesome. Get the selfie. Yeah. That's awesome. Get him to sign your T-shirt. That kind of do the whole thing. Yeah. All right, so let's launch into it. So, sorry, go ahead.
I'm not gonna be getting any Celsius swag though this time. Because... yeah.
Ouch. Unrelated. You guys see that one? Who said it? Was it Size Chad? He said on Twitter today that he said that because it's what's the conference right now? It's NFT New York, right? NFT NYC going on right now, and he said that he spotted Kyle Davies and Suzu there. I don't know if he's kidding or not, but that's what that's what he said. So that'd be wild if they're actually there. Yeah. Anyways, we'll talk more about that later on.
I'll let you guys know.
Yeah. Cool. Okay, so let's blow through these slides, and then we'll get to the chance we get to all chat together. But I just thought I'd do a quick update on the calamity that is crypto right now. So let me just jump to my screen here. So do a quick crypto market overview, DeFi rundown. We'll just look at the TVLs and market caps because that's kind of fun to see the disaster that is crypto, and then we'll just basically open it up. So no more than about 5 minutes. So our mission. You guys don't know the mission. Just a quick refresher. We're all about we're trying to build this community out. So any way you guys want to get involved, contribute, participate, we're open to ideas and open to ways that we can get more folks involved and to build this community out. And this is the fun thing is we're building in bear markets. We're not stopping. So unlike if this is your first go around, the best time to be if you believe in the long-term story of crypto, Web3, and digital assets, then that now is the time to get into to start building, because the projects that do best are the ones that build during bear markets. The folks that leave, they're obviously just tourists. The folks who stick around, we're here for the longer term vision, and now's the time not just to invest and buy coins, but obviously if you want to get involved, and become a builder, this is the best time because the tourists are now long gone. So let's get into it. So the market cap, man, I wish I had like a one of those like those retrospective slides where it goes from good to bad to worse, so you kind of like devolve. It's kind of been this kind of slow bleed, and then it became a quick bleed. But year to date, there's nothing much that's green other than a few stable coins and a few kind of like weird projects that have popped up that are kind of outliers. But everything else is pretty much red. It doesn't matter what theme you're trading or what the thing you're trying to invest in. Pretty much everything's red. For the year though, Bitcoin's only down 55%. That sounds kind of weird, right? Only down 55%, but in all, given the just the outrageous amount of selling we've seen in some of these other alt names, Like look at Solana, 80%. It's not uncommon to see 80s and not close to 90s. Like AVAX, that's like I think one of the best in terms of tech plays, like one of the best blockchains out there, down 84%, right? And it's bounced a bit the past couple of days. So if you had bought it, if you had looked at this chart about 2 days ago, it was probably down closer to like 80, 87, 80, 88%. So yeah, it's just some of the some of the names have been really, really beaten up. Even guys like Atom, again, also really solid technology play there, really, really beaten up. So yeah, there's really very, very few places that are safe. People that just to recap, people thought that there's some safety in stable coins, but obviously everyone's playing. That was their thought as well. We all know what happened with the UST, and that was also not a safe place to be. And so now there is really no safe place to hang out, except for I think this is probably the most compelling thing is that, well, the narrative that makes the most sense is that USDC has caught up a lot with USDT. So USDT up until the last few months was clearly the leader in stablecoins, but now USDC, people are now feeling more safety parking it in a regulated stablecoin. USDT has had a lot of redemptions. I think at one point they had $10 billion worth of redemptions in less than a week. It's still kicking, still going. The peg has not broken, but USDC, people are now especially in North America, I think are more comfortable holding their assets in USDC. Next slide, stablecoin market. That's the name of the game, right? If you have nowhere to hide, unlike previous crypto market cycles, we actually have stablecoins this time around. Some of them have failed. Obviously, UST. Was it who posted the other day on the Discord that MIM had started to depeg as well? So a lot of stablecoins, algorithmic and otherwise, have started to depeg because people are worried about the backing. So clearly a lot of stablecoin markets has been under challenged, and USDT now down to only 44% of the market cap. So there's your top stablecoins, right? So here you go. So now look, USDC is actually getting very, very close to catch up to Tether. So another 10 billion, which is not crazy. If USDT, if there's another round of selling, if people get really, really scared and they get the Tether FUD starts to kick in a high gear, would not be crazy to say that people might redeem another 10 billion worth with Tether, and then USDC might actually catch up or be very close to Tether. So USDC is slowly plotting its way up. Look at that month over month, 4% up on the market cap rankings.
Are you also looking at just the grand? Because what I had read, and I don't have the numbers like you do, is the grand total of stablecoin market cap has gone down. So when USDT, like when people have started moving away from it, there was a bunch that also went back to fiat.
Yeah, that's exactly it. Yeah. So I think it'll be interesting to see this number here. We have the data, like what was the overall stablecoin market cap prior to the recent pullback. So we can kind of see here, it's like right now it's 153. We used to be around 200 billion. So like you said, I think a lot of people actually went to fiat, right? They actually took that extra step and got out completely. So those are the tourists, right? And this, the stablecoin thing is a very new thing still. So, I'm sure a lot of people are still a little shifty about, do I even trust myself in stablecoins, or should I just go out and, cash out completely? Because like this cycle is different than last cycles. Like this cycle we have stablecoins, and this cycle we have actually decent off ramps, which we didn't have in previous cycles, right? Like nowadays you can easily get a lot of money out of crypto because of all the off ramps, because they're all regulated now. Unlike previous cycles where you're kind of stuck either in BTC or some other coin. So yeah, it's just pretty clear. Went from around 200 billion, so about 50 billion worth left the entire industry. Well, I'm not gonna say left the industry, but definitely got out of stable coins. So you can read into that. But good question. Yeah.
And just maybe 2 cents from my side. I also think that some people just had to liquidate because, or they had to sell because they were liquidated. They needed the money to, I don't know, mortgage rates are increasing, so they need the money to pay that, or I don't know, whatever. Their stocks, whatever. That's why they're withdrawing. I guess I'm not sure, but some of those, tourists, as you called them, Houston, they just withdraw some stable coins. That's just my perception, my assumption.
Yeah, I think you're dead on. The tourists have left, and because they had to make meet their liabilities, or Number two, yeah, there's secondly just for sellers, right? They have to pay bills in the real world. so yeah, you gotta, you sell what you can, right? So if crypto's liquid, like it is now, like this, that's the difference this time around. It's actually liquid, liquid not just in terms of being able to sell it at 4:00 in the morning on a Sunday night, but actually liquid as in I can actually get it off through an exchange back into fiat again. That liquidity is a premium. So I think that's definitely what we're seeing here. So people are leaving.
What happened again to USDD? Because it impacted a little bit by like 5 cents, right?
Yeah, exactly.
So it's still be pegging back and forth.
Yeah. Okay. I just took this snapshot about 2 hours ago, maybe 2 hours ago.
Yeah. So
that time was at 965.6. So not, again, it has broken its peg there. That's a whole nother story, right? Like Justin's thing, and I know they're actually trying to run the whole UST playbook again, which is kind of weird because they're buying Bitcoin, which is again, it could be very smart. Like he's buying Bitcoin at depressed levels. So maybe if Bitcoin doesn't crash, maybe he actually somehow Justin's son somehow actually gets out ahead of on top of the whole thing. But we'll have to wait and see. It's all very, very path dependent at this point. But the only reason I bring up this whole chart up is because I had this next slide. So obviously Tether, USDC, Binance, we all know those names, DAI and Frax. Those are kind of now the big five, because the one that used to be in the big five that's not anymore is that one there, Terra, now number 18. Still got 92 million in there. All right, so that's interesting, a little observation there. Next slide is around DeFi TVL. So clearly it has taken a big haircut. So at its peak here, maybe back in, let's call it what is that? That's June, so maybe like January. Actually, this is probably late 2022. Yeah, early 2022. Right about here. Right. So so that's around 240. Now down to 73. Right. So that's a pretty good haircut. That's a pretty good haircut for in terms of TVL. That's a combination of two things, as always. TVL is not a great metric, but it's one that people watch, so it's just interesting to watch. Again, not a great metric, but it's measured in token price. So all token prices have gone down. Just not a function of people leaving DeFi. It's it's a function of that plus the actual tokens crashing. So that takes it down to over a 50% haircut since this high mark here back in 2022, early 2022. Maker now being the dominant is now the dominant player in DeFi. That's the largest DeFi project now. And if you recall on our last call, maybe the call before that even, used to be Curve, right? So Curve used to be the big boy, right? So now Curve has lost that position, and now Maker's to the number one spot. Because we all know what's happened with, I don't know if you guys know what happened to Curve, but we can talk about that later. I don't want to spend too much time. There's a lot of stuff that's going on with Curve, and the fact that they're front and center in this whole. Curve's worked very well. Like, from a DeFi perspective, it's worked very well. But Curve has been front and center in terms of the carnage that has fallen upon the crypto industry, both in terms of the Luna debacle as well as these folks who are have pools in around STETH. We'll talk about that maybe later on if there's interest. Top chains. The funny thing is, here Justin's Tron now is number 3. so it's a wild world. Tron was basically a dead chain, pretty much dead. Maybe a few months ago, about a year ago. But yeah, with the Tron's stablecoin launch, they're basically number 3 now, right behind BSC. Still quite a bit behind in terms of TVL. But they're above Avalanche, above Solana. so pretty wild. Even above Thematic, which is these are all decent chains, and now Tron's number 3. So I don't know if anyone has any comments around that. But look at this. What's weird is this, right? Like, look at the protocols. There's 500 protocols or projects on ETH mainnet, 400 plus on BSC, AVAX 220, Solana 72, Polygon 260. Tron's got 9. So it's just funny, so they're in the top 3, they only have 9 actual DeFi projects on that chain. So it's an interesting, I don't know if that means
that's
it's
actually
short
exactly what I was going to say. The with 9 projects and 4 billion TVL, is it just 1 or 2 of them that have like 98% of it? I have to go look now, because that's very interesting, which means it probably has some of the biggest projects in DeFi right now, if that's the case.
That's exactly it. Yeah, that's exactly it. Because the next slide shows that. So top 15 DeFi protocols. look. So this maker, as I said, that's the big boy now. It surpassed Curve. But if you go down the list, look, this one here, Just Lend. What is that? I've never even heard that before. That is actually, that's Justin, just JST Justin. That's actually on Tron. Here, Sun.io. It's a DEX on Tron. Just Stables. I've never heard this before. It is Algo stable on Tron. $1 billion here, 1.2 billion there, 1.6 billion here. So this thing here, like Just Lend, is doing better than Balancer. It's just like an OG DeFi project. This is doing better than
I've never heard of any of these guys. I haven't. That's wow. Okay.
As I was doing the slide today, I'm like, wow, I'm really up to date because I've like never even heard these DEXs before, like these lending platforms. So I think Justin's doing a really good job, as he always does, like kind of cheerleading and bringing investors in. I don't know if it's his money or he's controlling some other funds, but he's also really good at driving interest into his projects. And it takes a certain level of egoism to actually have all the projects based off your own name, right? So it's like Justin, Sun. This one's there's like guy's name Justin here, so it's pretty wild. This guy, control that much TVL, and it's all like kind of like projects that are shelling his own brand, which is really amazing. Just imagine like a Beyonce lending platform, like a Beyonce DEX and a Beyonce stablecoin.
That is hilarious. You said that's hilarious.
It's pretty wild. He's like quite the influencer. So yeah. So I'm just very curious to see where it ends up, because I don't know if this is me. It's a great time to short these projects now, or is it more like this is just the beginning and maybe he's going to take it to the moon? But I don't know. Or is it we beat down so bad right now? This is why these things are showing up on the list. But it's interesting to see. Last one's Lido. Lido's obviously been in the headlines from all the debacle with ST.ETH. I think a lot of people learned a lot of lessons the hard way there. We'll talk more about that, I think, when we start talking about Celsius, because that's really at the forefront of that 3AC blow up, as well as the Celsius blow up. Okay, and that's it. That's the last slide. So that's the discussion points from last time. But let's just open it up now. So we've got 30 minutes left, or how much time you guys want to go for. So I'm gonna stop sharing now, and let's just talk. I have a few things I'll have to cover, but I'm actually more interested to hear what you guys are looking at and what's of interest to you guys.
Well, I guess I kick it off then.
Yeah, kick it off, man. Kick it off.
Everybody's shy, waiting for the other one to get started.
There's so much stuff, man. I don't know where you want to start.
I know. And I think I mentioned in the Discord, this whole thing about soul-bound tokens. I've been listening to a few podcasts, amongst others like this Bankless podcast and Vitalik, etc. So I don't know. Any thoughts about that? Soul-bound tokens, of course, tokens that cannot be exchanged, that are that more or less contain all the information about you, who you are, instead of giving you information to the government who has, I don't know, your passport or your social insurance number, etc. Anybody ever came across? Has anybody ever come across any soul-bound tokens? I don't know, white papers or podcasts, or just curious to get your thoughts and your ideas.
What is soul-bound exactly?
Sorry.
I think the question was, what is a soul-bound token, for the folks who may not have heard the podcast or read the material, the white paper.
Yeah, of course.
Yeah.
So from my understanding, and I tried to mention it in a short and a half a sentence just now. So from my understanding, a soul-bound token is a token that is bound to your soul. So that is where all your important information is captured, and you cannot exchange it. So that's the idea. Vitalik, he with two other people, they wrote a paper on that a few months ago, and now they've been on a few podcasts discussing it.
Yeah, I really made the rounds a few weeks ago when they're publishing that paper. We're on all the
heard
pods.
about it. Didn't look at it more than what I saw in passing. I saw it here. I saw it on a couple other Discords. People mentioned it, and then immediately you see ghost memes about it. But besides that, I haven't looked at it really more than just hearing about it in passing. So yeah, sorry.
No worries. It's
It,
just curious, you know.
it sounds a bit similar to the what Global ID does with decentralized identity. I don't know if anyone's used the app. It's to verify like credentials, and like you basically own your private keys, and all the information is held in like a vault somewhere. So the parties that request like whatever information, like you can control what they see.
Yeah.
Global ID, is that what you said? Is that a token, or what is that? Is that a protocol?
It's an app. I don't think they have a token.
Okay. Global ID app. Never heard about it.
I think that's definitely the next, that's the largest amount of white space that exists right now. I think in this field is, how do we begin to create, either reputation on chain or something that's, not transferable. I guess that's the whole point, right? I think that it's kind of a playful thing by saying soulbound. I think it cuts both ways. Right? Some people hear soulbound, they're like, yeah, it sounds, it sounds iffy. And then the other folks like, oh yeah, I get the idea of soulbound. I think it's necessary at some point, right? Like if you do a bunch of stuff on chain, you should have some sort of reputation that you can carry on with you. But at the same time, you don't want to be able to sell sell your reputation to someone else, right? You should be able to say, hey, I was a great credit score. Let's give to this other guy. I'll sell my credit score to someone else. And that obviously sounds wrong as well. So I think, I think we're so far off from that. I think there's a lot of competitors in that space. I'm not sure. Yeah, I think it's a battle for mindshare right now because I think so many projects are working on that. I think that's the next big thing, right? Whoever cracks that nut or gets the adoption, I think it's definitely going to be a large winner. Whoever figures out how to crack that nut. Because Microsoft has been doing this stuff for like a long time, but never caught on. Like DID, I don't know what the stands for anymore. Something digital identifications or something like that. They try to come up with their own thing, but they couldn't. No one's ever picked it up. Obviously, I don't know if you guys saw like what's his name, Jack Dorsey from Twitter. There's this Web 5 movement going on now that also has DID built in, decentralized IDs. So that's kind of the same idea, right? So I think we're all kind of. I think so many people are trying to crack that nut. So I think it's a super important one. But Web 5 is pretty funny. That's a pretty funny meme as well. So they're gonna have that built right into DIDs, like decentralized IDs are built right into that Web 5 stack. if people adopt it, that's gonna be another question about that. Yeah.
What is he building it on? Is it on Bitcoin he wants to build it? Like, how does it work?
Well, Bitcoin is the monetary part of it, but the rest of it is, basically the web translated. So it's kind of like, I don't know if you guys have read that stuff or not, but it's the reason it calls it Web 5 is because it's Web 2 plus Web 3 equals Web 5.
Okay.
So, yeah. So, he takes all the stuff from Web 3 where, people can own tokens and that kind of stuff, but then takes it one step further and that turns into Web 5 by actually making it more decentralized so that it's not just based on tokens or people can, we all know Jack Dorsey's point. He doesn't like the VCs and, he doesn't like them, being own stuff pre-seed. So, yeah, this point here is, you're going to basically create these other structures that are completely decentralized. So you're going to have separate stack. Yeah, Klassica says he's having a hard time keeping his connection. Thank you, man. If you can, he's not even on right now, but yeah. Anyways, so he's going to have a separate stack for ID. There's a separate stack for the actual web part, which is going to be decentralized as well. And, separate stack which is probably more Bitcoin based for the payments. And these all are different stacks how to play together in Web 5. So, it's really this, the whole point is to make it decentralized. So there's not one single person or entity that owns any part of that single pie. They're all different parts of the pie. So, but yeah, I think it's still, I don't think there's anything that's built yet. I think it's more in the proof stage still. So kind of hard to see, hard to tell. It's it's all vapor. It's not even vaporware. It's nothing built. It's just, it's just an idea. Yeah. But I think it's super interesting because I think you need to challenge. I think it's good timing. You got to challenge Web3 principles, right? Because so many people have been burnt from Web3, the Web3, this Web3 cycle has proven, unfortunately has not led to really good outcomes for a lot of people. If anything, it's probably drew in a lot of people that probably got really burnt because of the kind of easy money or the lure of easy money, and it's kind of the enrichment of the wrong people. So I think we saw in this round was tons of scammy stuff that happened this round, right? There's tons of scammy. Unfortunately, as every single cycle happens, people who get burnt are the people who are not prepared to get burnt. So unfortunately, I think we just burnt off we just burnt a whole generation of crypto users. We're probably not going to get involved again until the next cycle. All right, like remember how long some of you guys have been around since the last cycle? Like took 2-3 years to get those people back in again. And then we burnt them, and they got back to the top, and then they bought their NFTs, and then they're worthless again. So those guys are gone for another 4 years, unfortunately. So we keep doing this, it's awful. So I really think that regulation now is inevitable. You just shown as an industry that we just cannot regulate ourselves, or just the fact that just too many scam people come in, and because there's not enough regulation that you can basically just act without any kind of recourse. So yeah, it's unfortunate.
It's probably part of the human psychology, which never changes, right?
It never changes, right? This is the free market for you. This is really a free market. Like, some people are just going to come in and not going to be educated, or don't have the tools, or don't have the time. That's natural, right? Like, who has the time to spend, focusing on stuff at 24 hours a day if you have a job? So, fortunately, you believe. What can you do? Like, you don't have the tools, you don't have the knowledge, experience to judge these projects. So you believe other people. That's just natural. That's the way we work in the world, right? It's like I can't do a heart surgery. I gotta believe on if I need a heart surgery, or if I need my heart to get repaired, I'm gonna believe a surgeon or someone who's an expert. But unfortunately, you've seen this. The experts in this industry are just not very good. They're like shills. They're shills at best. They're just incompetent at worst. So it's sad. It's just unfortunately sad. So yeah. So on that depressing note,
and you guys, what I always find funny, these smart people, I mentioned one of them, like Raoul Paul, these smart people, they go out there and say, like Raoul Paul, for example, in November 2021, he goes on there and said, I'm irresponsibly long crypto, Next thing we know, Ethereum down 80, or what was it, 75%, It's like, dude, I mean, you can't be wrong more, It's like, oh my God, It's like, I don't know.
Yeah.
It's and we can't blame these people, because one has to make up his own mind and decide, okay, do I follow him? Do I don't follow him? Do I buy what he buys? Whatever,
That's it.
So,
that's it.
I don't. Some people do it on purpose, misleading others. Others, they just think they're the experts. These expert bias. This overconfidence of experts. But no, they are not experts. Nobody knows where crypto is going to be in 3 months. Nobody knows.
That's it. Yeah. Yeah.
Anyway.
No, that's a very good point. Yeah.
I have a question.
Yeah.
What if
Yes, Adina.
Satoshi started selling his Bitcoin?
Yeah, what if, right? Yeah, that's a good it is a good exercise to think about. And it's becoming less and less relevant as time passes, because more and more likely that as time passes, he's probably not going to come back, because he or she or they may be gone or dead or whatever. But
Well, I read in one article that he was going to pass it on to the next generation. He's passing on his keys or etc. and his wallet to the next generation. He said it was for his children. And another article just said, well, the price of Bitcoin would probably go down, obviously. But other than that, not much else would happen. It leads me to my second question is, all those coins and all those tokens that just suddenly go missing because people die without leaving any evidence that they had access to tokens. It's not like fiat money where if you lose $1, the government just prints another coin. Eventually, there will be less and less, you would think, if you're thinking in infinite terms, fewer and fewer tokens to trade or to hold or to do anything with, say in 50, 100 years from now.
Yeah. That's exactly the value prop of Ethereum and Bitcoin, right? So this is not yet with Ethereum, not exactly yet. They're still inflationary, mildly inflationary, but at a certain point, Bitcoin and Ethereum both will be deflationary or disinflationary, because they're not going to be printing more coins. So yes, ultimately you have a shrinking pool of coins, because like you said, people while they die, or people will lose access to their coins for many reasons. Let's say they drop their their ledger stick into a lake somewhere and can't recover it, then then won't be able to get access to those coins. So ultimately, it is an asset that will have less and less inventory, which technically, if you believe in supply and demand, should over time, depending on liquidity issues, right, lead to higher prices. But that's Satoshi thing about him leaving his kids. I never heard that before. I don't know. I never heard that. I never heard about that. That scenario. I'm not sure how he would do that. I don't know if that back then when he was still active, if they had the ability, or he had thought about doing time locks and that kind of stuff. I know it was possible, but I don't know if he ever expressed doing time locks and doing that kind of stuff. So that's the first time I've heard of that. So that'd be interesting. But yeah.
I mean, the most likely is whoever was responsible or had those keys passed away and nobody knows where those keys are. Like that's probably the most likely scenario. A million Bitcoin, when we saw the all-time high at 65,000, like, I don't know. Unless you actually think that they're waiting for it to hit some ridiculous number to reappear on the scene, I highly doubt that, like the story of the guy that got the 10,000 Bitcoin for his pizzas. No way in hell does he still have those Bitcoin, right? Like at $1, $10,000 for 2 pizzas. I'm sure he, when they hit a quarter, I'm sure he would have sold. So if you're sitting on a wallet with 1 million Bitcoin, which is what that those wallets that haven't been touched in so many years, anyways. In my mind, logic would dictate that they have those keys are long gone, or those wallets would have moved. That's I guess my logical interpretation of it. But it's people that have said all kinds of different stories because of where those million Bitcoin are going. Anyways, that's my 2 cents. If it helps at all, usually the simplest answer is the correct one.
Yeah. There's all kind of wild speculations that you can imagine, but I tend to agree with Jimmy. It's like, the simplest answer is probably this person or entity or whatever probably cannot access the coins anymore. Otherwise, it'd be unhuman to try to hold through this amount of price appreciation, to see it, come up and So you'd think that either they're in jail, they're dead, or something, so that they cannot access it. Otherwise, any human being would be too tempted. Yeah. I
mean, actually, I hadn't thought of the jail one. That's an interesting one, because just imagine you're sitting in jail, banging your head against the wall, going, "They're at what? 65,000 each."
I gotta get out of here.
Okay.
Yeah.
Sorry, didn't want to derail.
Going back to
did anybody?
Go ahead.
Sorry.
Oh, go ahead.
No, just on another note, I got this email from Shakespeare this morning. Shake Squad. Did anybody get that?
Yeah. Shake Squad. Yeah.
I don't know. I mean, I know that a few from us, they shake their phone every morning, just like I do. Like,
where's Naga, the shaker?
The shaker, exactly. So, for my understanding, is if we create a pool of like 4 or something like that, we get another few satoshis, something like that.
Yeah, let's do it. Let's put a Shake Squad together on Discord. Whoever, does anyone use that service right now? Does anyone pay using Shake Pay, using the the iPhone app or the mobile app to pay for stuff through Shake Pay?
I do. Yeah.
Do you?
I do, but I didn't know you can shake it to get free sats. That's pretty crazy.
Oh yeah. That's the
you have to do it, Matt. Yeah, every day shake it.
Let's go. Shake.
And it's increasing. It's exponential. Every day you shake it, you are not allowed to miss a day. The first day I think it's 100 sats. Correct me if I'm wrong. The second day is like 110, but then it's 130, then it's 160. It's exponential.
There's a 24-hour timer on it or something?
Exactly. Yeah. Every day 24-hour timer. Wow, that's the first time I've heard it. Someone didn't know about it. Actually, that's not true. Naga didn't know about it either. Who told them? This
now
the whole
I feel like I really should have. I looked at it as I don't know how many times after you guys talked about it at the the event, the in-person event, and everyone was talking about it. I'm like, okay, I'll go look at this. I think I opened the website once, and I'm like, do I really need another like do I need another way to buy Bitcoin? So I ignored it. But now, I mean, if we're gonna do a group shake thing, like, okay, fine, tell me.
Let's do it, guys. Okay, Maria, set it up. Drop the link. Sign up and drop the link, and we'll all sign up. Okay.
I will do so. Yes.
All right. Yeah, set it up, and we'll all log in. We'll join. My only thing is that I think this cycle is showing us that not your keys, not your coins, right? Like that's clearly like this is like a lesson that's been reinforced over and over again over time. But this cycle has shown once again that there's a reason why it's like a diehard truth in crypto is that we can never forget that lesson is with Celsius falling apart. Also, we have to talk about that. Is if you don't have access to your your private keys, then unfortunately you can get rugged. So that's kind of the whole vision of Bitcoin and crypto, for that matter, is right. We begin to maybe lessen our reliance on decentralizing entities. So even though the yields are really, really tempting, the tail risk is just something you cannot measure, right? Like you don't know what's the proper amount of compensation to deal with the tail risk. So is it 7%? Is it 10? Is it 19.5? Like we have with like with UST? Like what's the right amount of yield you need to collect in order to to mitigate that tail risk? It's impossible. You don't know. Like if any kind of informed user, it's impossible to know, right? Because you just don't know. It's all path dependent. So it's very, very risky stuff, right? So I, just being fully frank, like I got very lucky. I withdrew my Bitcoin out of there about 2.5 weeks ago, 3 weeks ago, because I just started getting this, the spidey senses were like, this is not right. Something, and just, I had been watching Celsius carefully because I was getting more and more, the spidey senses were tingling. And then you're seeing the yields are shrinking, right? Like over time, as the markets are getting tougher and tougher, it's tougher for them to make money, right? So the yields are shrinking. And at a certain point, you just do the calculation, like, this is probably not even worth it anymore, right? Like the yield that I'm getting for my Bitcoin versus the tail risk of like losing it all, it's like it doesn't make any sense. It just the risk reward is not even there anymore. So, and the beauty is that with crypto is that there is no friction with removing it. You can take it off. If everything turns out to be fine, you just put it back in again. You missed like what, 1 or 2 months of payments? That's nothing. for missing the whole tail risk, it's worth it, right? So that's the beauty of crypto, is that there should be no friction to get out with most of these protocols and these exchanges, right? So
the only friction is the gas fees and transfer fees, and that's the one reason I haven't, because I have stuff in Nexo and Wealthsimple, and I'm looking at it going, after the whole Celsius debacle, I'm like, no, I'm gonna slowly start moving this stuff out. But then the cheapest way to do it is to transfer it to like XLM or something and then move it. And I'm just like, do I really want to go through all of this? So but you're right, not your keys, not your crypto. And actually I had a question on that. Do you guys are you holding your Bitcoin in a Bitcoin wallet, or is it wrapped Bitcoin on some other chain? Because I mean, I like my MetaMask the most. It's the easiest I find. I'm just curious what if you guys are doing anything in particular, if you have concerns with wrapped Bitcoin as opposed to native Bitcoin.
Yeah. Who wants to take that one? Who's got wrapped Bitcoin?
I don't have wrapped, but I think there's like a custodian. I think someone is taking custody of your native Bitcoin and whenever you wrap it, I think in some cases. So there could be a risk there. But other than that, I don't even know if they can depeg against the native asset. I haven't seen that.
Yeah, I don't have any experience to wrap Bitcoin. I don't wrap in my Bitcoin. I just keep my Bitcoin unwrapped.
Can I ask what kind of wallet you're using?
Yeah, I got a Trezor and a Ledger.
Okay.
Yeah, but I haven't gone for the full multi-sig setup yet. But that's just something I've been getting around to doing, but I haven't gotten there yet.
Yeah, I think that's probably the next step is to get it on a Ledger. Okay.
Yeah, for sure.
Not drop it in the lake.
Definitely go hardware. Yeah, exactly.
I just got
But you know,
myself.
I'm looking right now. So I'll just make one
You
point,
go.
and then I'll pass it to you, Marius. Like I'm looking right now, the gas prices for ETH, it's like 21, gwei. So it's like super cheap because no one's using the chain anymore, right? So
Yeah, that's true.
if you're gonna move it, you gotta move it now. Like especially on a Sunday, on a Sunday night, it's like 14 gwei. So it's like, yeah, do it on like on a non-weekday, and it's like super cheap. So now's the time to do it, as opposed to when things pick up again. It's gonna get more expensive, but yeah, on a Monday afternoon, 21 gwei right now, so it's cheap.
Well, isn't the U.S. markets, aren't they closed today for something? What's the holiday today? It's I don't remember.
June-19th.
19th.
Yeah, June-19th.
Okay, so that's probably why everything's so. Okay, well, yeah, you're
It's like a Sunday
right.
today.
Yeah,
it's like a Sunday.
So okay, fine. Give me more homework. Jeez.
But the neat thing is that Bitcoin, even this bull market, the Bitcoin transaction costs have stayed down. Unlike back in 2017, 2018, it was expensive to move Bitcoin around, right? Like I remember back in 2017, 18, it was like you didn't want to move Bitcoin around because it was like, wow, man, this is painful to move around. But it's actually not that expensive because I don't know, there's a couple of reasons. I think a lot of people say it's because of Lightning. And number two, traders are not moving as much Bitcoin around anymore because they have stable coins. So like, I remember the last cycle, if you needed to, you're trading on BitMEX or whatever, and you had to flush out your positions, get flat, you have to move Bitcoin around between the exchanges. So that was creating volume. But nowadays, most traders on most exchanges, you settle in USDC or USDT, right? So so that's why there's less Bitcoin usage. So yeah, the actual that's not maybe that's not a thing for Bitcoin in the long term, that people are using less of it. There's less traffic on a network. But yeah, certainly the prices are not crazy like it used to be years ago.
Just Jimmy, just from my side, I also own the Ledger Nano as well as a hot wallet with Exodus, and I do like that one with Exodus.
Exodus, yeah,
it's pretty nice.
You're right.
Because if you don't have your Nano Ledger or your Trezor Ledger, your thing at hand, with the hot wallet, you're kind of a bit quicker. It's not as secure, I agree, but it's still your coins and your keys. So just an idea.
So again, you're using Ledger, and then what's the other one name?
Exodus.
Yeah, Exodus. Okay, gotcha. On the phone.
Yeah, I have MetaMask too. Sorry, I forgot MetaMask. I have that too. Yeah. Sorry.
So Exodus on the cell phone.
Yeah, you just can't put Bitcoin on MetaMask.
Yeah,
right? MetaMask is just ERC20. So I've been looking for a Bitcoin specific wallet, and I was like, do I even bother? Do I just leave it all unwrapped? Or now, just I'm listening to people, and you're not the only ones who say, no, man, keep your Bitcoin as Bitcoin. So
Doesn't Cake Wallet do that? I think Cake Wallet does accept Bitcoin natively, right? That's a mobile app. Cake Wallet. I gotta double check on that one. Cake Wallet. I think I heard somewhere that does that, as well as obviously supports Monero. So I think that's one of them. I have to double check that. Yeah.
Okay. I mean, a Ledger Nano is $100, not even $89.
Yeah.
So what the hell am I waiting for? Okay,
wow. Exactly.
Honestly, I thought it was like, I don't know. I thought for some reason these hardware wallets were way more expensive.
Yeah.
I think they have different versions. They have a one for $100 and then more expensive ones for, north of $100. I don't remember.
Yeah, a couple hundred.
I don't know. I'm probably not rich enough to need one for more than $100.
You start buying now, let's load up, man. By the next bull market, $100,000.
I did have one other question I was hoping we'd cover, and I'm just you did mention Celsius, you did mention Staked ETH, and I did a bit of digging on my own, and I mean, my understanding, and please correct me if I'm wrong, is the fact that Staked ETH is depegged from ETH makes no sense at all, because once the merge happens, one Staked ETH equals one ETH, no matter what. Am I wrong there? Like, is Staked ETH just a much better deal right now, and unless the merge never happens?
Well, that's the arbitrage play, right? But the reality is that the peg doesn't have to be 1-to-1, because there's obviously risk involved. Like you said, there's a chance that it may not happen, and then there's a lot of also uncertainties around, there could be smart contract risk, there could be, all kinds of other events that could happen that doesn't keep that, that keeps things that gives, I guess, is less of a premium on staked ETH. I think the best analogy is the one that the people have given is kind of like GBTC. You know how GBTC is currently trading at a discount from Bitcoin?
I didn't know that. Now I do.
Yeah. So the Grayscale Bitcoin Trust, so it used to trade at a premium to Bitcoin, but for the past, 2 years, it's been trading at a discount. So technically, it's a really good arb if GBTC can ever turn into an ETF, right? Then that 20%, whatever the number is, I don't know what it is today, but that 20% should disappear immediately because people can redeem GBTC straight to Bitcoin. But obviously, there's that time component, right? There's that risk. So there's no reason why that has to close at any specific time. I think that's why a lot of players got caught, right? Like I think that's the whole thing with 3AC and Celsius. They're like, yeah, it makes it great. It's going to close. Yeah, for sure, it's going to close, right? So that's the logic. But the problem is that it doesn't have to close. There's no time period or time frame on when that's going to close. So unfortunately for the 3ACs and the Celsius guys is that there's that duration mismatch. If your short-term liabilities don't meet your long-term assets, you can't pay you don't have the cash flow to pay. Yeah, you're going to be in trouble. You're going to become insolvent. And so, yeah, I think that may be a good arb at some point, right? Just make sure you're parking money or that, that you can withstand the volatility and not get margined out as you wait for that arb to close. So I think that's what a lot of people got taken out on a stretcher because they thought, hey, STETH is even better than ETH, right? I think that was the mistake that people made this because, ETH is staked ETH was fortunately like basically dead money, right? Just sits there. But STETH, you could actually obviously, I don't know if anyone knows on the call, but you could take that money and drop it back into like Aave and go, basically collateralize it and get a loan on it to do more DeFi stuff. And so a lot of people did, and they got carried out on the stretchers. Right? It got carried out doing that. So that's a sad part. I don't know why. I'm really disappointed in Celsius. These guys should not have been playing heavy in those pools. Like this is not your money. This is not even like, this is speculative stuff, right? Like this is like, logically you can say, yeah, it makes sense that STETH should eventually, or should become, should be pegged to ETH, but that's not even the game you should be playing with other people's money, right? Like there's no precedent for this stuff, right? So like, how can you even have the mental models or any kind of model that you could even, confidently go with to say that it's going to happen in any right period of time, like these guys are way off on the risk curve. I don't know, like it's not like a safe play. Like it's like serious degen stuff. They're gonna do it. That's cool, but you just recognize it's degen DeFi, right? This is not like simple DeFi where you're taking out like 1% loans. This is just like serious degen stuff that we're doing with investor money. And you're supposed to be a safe place, like a safe bank for people to get savings, right? It's crazy. Like I expect 3AC to do that because they're a hedge fund. That's fine, they're a hedge fund, it's private money, they can do whatever they want. But like Celsius doing that with investor money and you're being a degen, that's I think it's
especially since you're touting yourself as a bank, right?
Like, right.
That's it's one thing to say you're investing in a fund and the fund has risks involved, but most people are considering the money they put in the bank as safe as possible, and so this is a crypto bank,
that's
like,
it.
So
we're regulated, blah blah blah. We don't, exactly. He's always out, Mashinsky's always out every Friday doing his AMA saying we're still accepting money, debank yourself, come to Celsius, yada yada, right to the end, right? We're still doing it on the Friday before they shut it down on Saturday,
Oh, I didn't know that. That's messed up.
Yeah, I was so disappointed. I thought like the Alex guy, he's been going around for years, and seemed like a decent guy. And then on a Friday before they sent up that announcement, oh no, everything is fine. I mean, I have never actually listened to the AMA calls, but I mean, serious guys, come on,
Yeah, you can't be doing DeFi degen stuff when you're calling yourself a bank. Like this is like the worst. Yeah, like this is like just like you're making fun of the old school banks and you're doing the exact same thing, maybe even worse. Like these guys are obviously the old school banks are dealing in CDOs and CDSs and subprime stuff, but you're not doing any better. You're doing some degen DeFi stuff and you're calling yourself safe. This is terrible. It's like, man, terrible.
And when I looked at their lending rates, whether it's ETH or Bitcoin or the stable coins, it's not that these yields were any close to wow. I have to put my money over there. You know, like Bitcoin, I think till up to 0.1 Bitcoin, they offered like what 5%, and below that it's like 2%. It's not. I mean, you know, it's I don't know.
That's what made it sound safer, right? Because they're like, oh, these guys are kind of safe because they're not doing crazy stuff. It's not like 19.5%. It's just like it said 5%, 3% on ETH. But they were going way out on the risk curve to try to make these yields, because it was getting tougher and tougher to make the yields. So they were doing crazier and crazier bets, unfortunately, because they lost a bunch of money in DeFi, right? They lost a bunch of money on that Badger DAO hack, Badger DAO. Yeah. They're the guys who do the wrap to BTC stuff. So I think they lost 50 mil there. They lost a bunch of mil, not a bunch, but they lost some money on the UST debacle. They were getting behind the 8-ball, and so I think it's just classic degen trading where you got to try to make it back, right? And it's just like I don't know what these guys were thinking. Just a real just shot the whole industry in the foot.
Weren't they also a lending platform?
Yeah, that's the whole claim to fame. Yeah. They're lending, they're a lending platform. Okay. Yeah. So they were a big lender, right? They lent a lot of money to a lot of people.
Yeah, so is Nexo. Like I'm on Nexo now, but like I said, I'm slowly moving my stuff off of there because like I just I don't know. All of this has got me like go cash.
Yeah, exactly. There's no harm in that, right? There's no harm.
Exactly. So but yeah, Nexo was offering like 0% whatchamacallit, loans if you held like on 20%, up to 20% of your assets. You could loan up to 20% at 0%, and then interest, and then above that is like 6% or something, which was very reasonable and a lot of fun to play with. But now I'm like, it's just not worth it. And someone told me I could actually use leverage on PancakeSwap. So if I wanted to, like in DeFi, hold on to my own keys and leverage my deposit. I have to go look that up. I don't take my word for that. I don't know how that works. I have to go look that up.
Okay. Yeah, PancakeSwap's really become quite the DeFi project. Yeah, you guys used it. It's on BSC, Binance Smart Chain or Binance Chain. So they're the premier DEX on Binance Chain because they don't have Uniswap over there on Binance Chain. But PancakeSwap does everything. They do everything nowadays, right? They got lottery tickets on there. You can do. I will not be surprised if they do lending. Yeah, you can do NFTs on there. They do everything. Binance, that thing is like a one-stop shop for everything. Unfortunately, their token price is terrible, as all DEXs are, as they basically emit too many tokens and they just devalue their token. But
you mean the cake token?
Yeah. The cake token looks awful. Yeah.
Well, I think every altcoin it looks awful right now.
Yeah. Because I'd rather be the owner of the chain, like buying the chain's token versus the DEX token, right? Because the DEX, they always emit too many, it's inflationary. It's too inflationary because they pay out, when they do, when they have pools, they're always emitting tokens as rewards, right? So unfortunately it's inflationary. So just naturally it dilutes the value of the token. So most of the value historically has gone to the chain, right? As people have to pay gas fees, those gas fees go back to the chain. So whereas the token, the DEX, I don't know how they make any money. Or they keep the money. They make money, but they don't think that it goes back to the token, unfortunately. That's the hard part. So back to the Celsius thing, one last thing around that is, the thing that I want to bring up around that is, we talked about the need for the importance of owning your own keys, the importance of that, and understanding the risks that these things are taking, and how a lot of that stuff is not modeled properly. So it's really hard to evaluate the tail risk in these centralized exchanges. And then I think the issue is the transparency of these centralized exchanges. I think that's what caused the most amount of damage, is that they're just basically black boxes, right? There's no insight. It's just like the traditional, these CeFi exchanges are, unfortunately, the DeFi stuff worked for the most part in this last cycle. Nothing really broke in DeFi. Well, that's not true. Stuff did break in DeFi, but the stuff that the OG protocols that allow these things to for DeFi to run, like the Aves, like the Curves, like the MakerDAOs and all these kind of DeFi OG protocols, they all worked as they should. Unfortunately, it enabled a bunch of degen DeFi risk taking which obviously you can't control, right? People are going to be people, like Mario said. If they're going to be greedy, or they're going to be if they want to take on risk, can't regulate that, right? Like people are just going to do crazy stuff, and unfortunately, this go around, there are a lot of crazy stuff happened. That was kind of it happened on chain, but it was done by centralized entities that you really can't control, right? So it's the tough part of how you regulate it, which is why I think regulation, when it does come, is going to be very onerous, and it's going to be you could see the world where it's going to be, everything's going to be KYC'd, and people are going to know they're going to know what people are they're going to be very strict rules around what you can do. So I could see a world coming out of this is you're going to have a KYC chain, and then maybe you're going to have some non KYC projects that are going to be kind of more gray market, black market stuff. But I think most of the world's going to move towards a more regulatory compliant chain that you can only DeFi a certain way, you can only trade crypto in a certain way, right? Because everything around beyond that is not it's outside of regulation. So the theme that I think I'm running with here is that ultimately, was it our last call that we talked about this? I think you got to watch what the criminals are doing. Like what are the criminals doing? Because ultimately, I think that's the alpha. Whatever the criminals are doing, that's going to be where the world goes. So ultimately, I think these non KYC projects, I think that's where it's going to go. People are still going to want to do their stuff, right? And there are people going to find ways to still live in the ethos of crypto. That is to move around, to get around these regulations. So I think I'm keeping my eye on what are these places that are kind of right now under the radar, and I think it's going to be around privacy and anonymity, because I think a lot of people learned this time around that it's not a good idea to actually have all your transactions on chain, because they know where your stops are. It's like, if you've ever been a trader, that's like the worst thing to ever share with anyone. It's like, here, I'm going to get liquidated at this price. I hope that they don't touch that price. It's like, that's a terrible idea. So I think a lot of participants this time around is like, we probably shouldn't share, like on chain, like where our stops are. Yeah, it make a hell of a lot of sense. So that's the weird thing this time around, is that everyone knows exactly where everyone's stops are, or can kind of figure out roughly, what your stops are at. So it's a very, very weird, because in bull times everything's we're all buddies, but in bear times we're all adversarial, right? And we're all going for each other's stuff, and now you have all your stuff on chain. It's not a good scenario, right? Like, this is why we're seeing these forced sellers come in, or this forced selling come in, because people know where people's stops are. So we're dipping a lot lower than we normally see because of this stuff. So anyways,
I found it interesting how over the last, let's say, 7 days, the liquidation, Bitcoin liquidation levels for Celsius were, posted like every other hour,
I know, exactly.
18,000. Now it's 7,500.
Keep going for it.
18,800.
Yeah.
It's like, oh my God, it's going up, it's going down. It's like, oh my goodness. And I just can visualize Alex, the CEO of Celsius, in front of the computer. Damn it, what am I gonna do? I mean, we're laughing about it now, but I mean, it's serious shit, no?
I know. Yeah, if it wasn't so tragic, it'd be funny. Yeah, maybe that's funny because it's tragic. I don't know. Comedy's based on
ouch,
in tragedy.
Ethan, I didn't know you had such a dark sense of humor, man.
In bear markets, yeah, that's exactly where I go. That's exactly where I go. So, but one last thing. I don't know how much time you guys have, but I'll open it up here and see if there's any other questions, things you want to chat about. I have one more thing I want to chat about, but we don't need to talk about it here if you guys want to jump. More on just the interesting things that I'm observing in the markets recently. Anyone else have any funny stories?
Go for it.
Yeah, the funny stories or things people want to have observed.
I just can't wait for our next in-person event. That's the only thing.
Yeah.
My last 2 cents for today.
Yeah, so we're going to definitely organize one. I'm on vacation at the beginning of July for just 1 week, so maybe this month is going to be tough. But early next, we'll try something. Who's going to be around in July? Is anyone taking off in July? Or are people going to be around in July? Just by informal polling, going to be around.
I'm camping. I think it's the second or third week.
Okay.
Yeah, the week of the 11th. I'm out. That's it.
Okay, Eunice, thank you. You said you're going to be around. Adina, you also raised your hand, and you'll be around.
Yeah,
okay, so
I've been closed the whole time. So I was woke being outside, but yeah, I'd love to join an in-person meeting. I love the ones in this fall. So thanks for organizing it.
Yeah, you're welcome. Awesome. Yeah, we'll try to do something in July. We'll get Kyle back once he gets back. I know he's on vacation for a couple weeks as well in July. So yeah, we'll definitely let's do a. Okay. All right. Thank you, Matt. Yeah. Okay. Thank you, Matt. So it's the 16th way. Yeah, it's just tricky. July's always tricky. A lot of people go on vacation, so yeah, we'll have to. Let's do a poll. We'll do a poll on Discord, and then we'll just see people's kind of dates and times again, and we'll see if we can try to find something. Yeah. Dean, okay. Yeah, if you want to just drop your dates or time, if it's good for you in July, Dean, and then we'll collect all this stuff up. So I'll make one final, maybe one final observation that I think is, that I've been paying attention to, and that's around kind of what we talked about earlier already, how difficult it is to actually evaluate projects that are legitimate in this space, especially DeFi. That's the beauty of Bitcoin and ETH for that matter, is that most of the stuff is blown up, is because it's been complicated, right? It's these complicated protocols, these complicated projects. Sometimes that that complexity is actually obscurity to obscure away the risks. Obviously like Luna and Terra, you have to really evaluate that project more than once to figure out how viable it was, right? It's not something you can figure out one go, with one pass. It's like you have to really think about Luna, and we did a spotlight on it, for a whole thing, and we talked about some of the risks there. But even with that, you still had to think it through because there's dynamic things were changing, and we always knew the risks that this thing could blow up if there was a bunch of redemptions, and if the peg did not hold, we knew it was going to be very reflexive. But even then, it's hard to evaluate these projects, and that's the beauty of Bitcoin and Ethereum for the most part. This cycle, the cycle's not done yet. Maybe the bear market's not over yet, and maybe more things can happen. But so far, the beauty of Bitcoin is that it just works. Yes, price has gone down, right? It's gone down 60% or whatever, but nothing's wrong with the protocol itself. Right? Nothing's broken. The hash rate still, still near historic highs. It continues to work even though prices have fallen. Same thing with ETH. ETH is obviously a little bit trickier because obviously there's a merge going that's supposed to happen and has been pushed back a few times. That's a little trickier one to evaluate. But ultimately these L1s, especially Bitcoin, it's an easy selling point because if you understand the, like kind of Dina said, you understand the supply demand dynamics, then over time this thing should just if it keeps running, it should play itself a certain way. These other projects are very difficult to evaluate, especially in DeFi, super difficult to evaluate. And I think the tricky part this time around that we've seen now is that not only evaluating the project based on its technology, but the hard part is as I brought up in the Discord, this past today, I think I said that the tricky part is what is the governance around these protocols? And that's the tricky part because you can't just get that from reading the documentation, right? That's like an evolving process. As we saw this past week with this protocol called Solend. Has anyone heard this story, the Solend protocol on Solana? What a disappointing. So I have not invested any money in that one, but I read it and it just makes you super disappointed in the whole space. But it just shows you this is what we're dealing with. So who here has heard of Solend? Raise your hands so I know how much of it I should get into. Or
this is what you were referring to on the Discord earlier.
Yeah,
the whale account,
controlling the whale's account.
Yeah. Exactly, the whale account. Yeah, I see some people saying they don't know, but also I'll give it the really short brief or overview brief about it. Is basically Solend is a DeFi protocol on the Solana platform, and it's basically like Aave, right? So you can it's a lending platform where you can deposit your Sol tokens, and then you withdraw money and borrow in USDC, and then do whatever you want with that money. So unfortunately, with this project is that a really, really large whale. They didn't think it through, but there's one single address, this huge whale deposited, I think something like in the order of like 100 million, worth of Solana on that protocol. So they became the largest basically entity on this project, and now they realize that they have a liquidation price of like 21. Around that price. So Solana is currently trading at, don't quote me on that, but right now, earlier today it was trading around 32, 33. So, if it drops to 21, there's going to be forced liquidations to the tune of $100 million of Sol. That's going to hit the market directly, right? Which is going to a huge, and this is a DeFi protocol. So it's not going to be like a calm kind of orderly sell-off. It's literally going to be market bid on a very, very, illiquid order book. So it's going to be a huge spike down, which is going to trigger a bunch of other stops and cascading effects. And likely, the protocol itself will not survive because it doesn't have the buffer to be able to navigate that kind of drawdown. So so the question is now, the protocol has made a proposal and said we got to basically stop this from happening, this potential forced liquidation. So what do they want to do? He proposed to take over this guy's address, take over his wallet, right? So that this thing can't happen. So they put it to a community vote and it passes. Very shady vote too, like really, really quick proposal. And it was a 6-hour voting window. And then literally one address was enough to push it over to the yes column, where they're okay to take over this person's address, give them basically a 20% haircut, so that they push out the liquidation price to a place that they think is manageable. So this is, I don't know if when I hear this stuff, it's like, this to me is not DeFi. This is not the promise of DeFi. This is not what DeFi was about, right? But then you have other people saying, yes, this is DeFi because there's voting going on, right? So a lot of people are voting, and there's a DAO. Again, funny thing is that the DAO was just put in place 24 hours ago, so it's not like a real DAO,
but I mean, that usually the way that works is if the whale doesn't have any governance on the chain, that's a problem, right? Like that he should, whoever this individual or entity is, and I agree with you. It's very shady the way it was set up and executed. I agree it is DeFi because if it was done properly, then the people that are investing large amounts of money are also have their say on the chain, right? Yeah. Like he could, had his soul been a governance token, well, there'd be no chance anything like that would pass, right? Yeah. Like this is where I think the shadiness came in, is someone tried to do something without taking the weight of the investment, into consideration, or well, they took it into consideration. They're not acknowledging that consideration. Yeah, good point. To me, I can argue it both ways. I can definitely see why the protocol wants to save itself and its users. Who wants, if I'm the founder of this protocol and I start this thing, I do not want to see it crash and destroy all my users on the protocol. So I'm going to want to try to save it. And that's a logical thing to do. And this side, I can also argue the other side. And it's like, people get involved in this protocol thinking that the code was kind of more immutable. But if all of a sudden now people can just make changes anytime they want, because they think that it's in the best interest of a cohort of people, that creates a very slippery slope where now I can't trust the protocol anymore either, right? So because anytime things go wrong, they're just going to change the rules. So this whole idea of immutability in code as law is also, I think, very important. So I think we're in a very slippery game here now, where it's not, for me anyways, like DeFi is not what I thought it was, in the sense of mob rule in a way. It's like whatever the mob wants, the mob's going to get. At the same time, it makes sense, but man, it just leaves a bad taste. Like there's no easy answers, no matter what, right? There's no easy answers, and I just unfortunately just leaves a lot more questions, and it's just not as clear anymore. That selling feature that DeFi used to have was like, code is law, and your money, you own your tokens, you own your keys still, so you should be able to get out anytime you want. But here you realize these people are basically saying, we're going to take this guy's money, whether he likes it or not. Right? So it doesn't matter if he has his keys or not, they're still taking his money. Right?
So I would, like, if I need to add, like, that's from what I've seen, it's a sort of chronic problem in the crypto space, especially in DeFi. Yes, like we say, code is law, but then there's also like the whole voting aspect. So in the scenario you're talking about, really vote, like the whole on-chain voting governance, like there are problems with that, and like the example you just gave is exactly that. Actually, it's basically capital, like the one who has the most capital ends up deciding, and that might be actually hurting like some of the other people, or like a small minority, or like whatever, or like an individual with lots of capital in this case. So and that actually ties very well to the previous conversation around soul-bound NFT and some of the other things, because I think what Vitalik and some of the others are trying to do there is bring in that aspect of one person, one vote. And we want to have a balance between between the two. So
Yeah.
right now, like in today's world, like outside of crypto, it's one person, one vote, and like to the extent, like to what extent does it work 100% amazingly is the debate. But then if it's all capital, like if it's all around like on-chain governance, then it's 100% controlled by like the capital. And then like how amazing is that?
Exactly.
Like, it probably isn't, right? Like so if you look at what Optimism is trying to do, they're trying to balance the two. And that to me that looks like an interesting experiment. Like they have two houses, like the citizens' house and like the token holders' house. So it's like I think we're seeing interesting experiments going on. You know, crypto will solve that, and it's interesting to see, and will continue to be interesting to see, in my opinion.
Yeah. Great points. Really good points. Yeah. Yeah, that's you're right. That ties really nicely into that soulbound token discussion, because otherwise, it's tricky, right? Like ultimately, like people can, if you can spin up a bunch of fake addresses or a bunch of identities and buy people's identities, people are going to be able to capture governance that way. But how can someone solve that where they could say this is literally one person, you get that one vote and it's not just you didn't buy this guy's ID you voted a bunch of times on behalf of 1,000 cheap people that are willing to sell their IDs away. So this just goes back to just democracy in general, right? Like I guess this is why people in the past you have to show up in person when you vote. So you can't be fraud. You can't have fraudulent voters who voting online and having all these fake ideas. So I think governance is super tricky, and we're seeing that now that this whole governance sounds like a great idea, but in the end it's like, man, mob rule, Sybil attacks, this whole stuff is nasty stuff. So any other comments? I think it's probably a conversation we can probably have over a bunch of beers and probably not resolve, but I think it's something that I've been observing and kind of definitely feel let down about the whole thing. Cool. Well, thanks for your perspective there, Eunice. I think it was a really good point you brought up there. Yeah. So we're close. We're past the hour mark and close to the hour and a half mark. So why don't we gonna wrap things up? If there aren't any other questions, then we're gonna do it again. I think we're gonna do it again in a couple weeks, right? I think we said every 2 weeks we'll do this call. So I can't be here in 2 weeks, but I know Kyle's gonna be around, so he's gonna run the next call. That's kind of actually fair. So I do this one, and he'll do the next one. So we'll keep doing every 2 weeks, but then we'll definitely, if you guys, I think everyone's, Eunice, are you on our Discord? Are you on our Discord channel? You're not? Okay, I'll drop it in the
link that's on what I found this. Yeah, please do.
Yeah, I'll drop it in the chat pod here so you can join, and we'll do a quick poll this week about who can make it in July, so we can find a time to get together. Again, one kind of nothing formal, just a simple get together. Have some food, have some drinks, talk about, do some coping, see if we're doing all right, make sure everyone's still alive, and we'll just keep building this thing. But then again, any ideas you guys want to do for future meetups? Love to do more project spotlights, and maybe we talked about some ideas last time about fun things that we can talk about, or I guess kind of. I guess different ways that we can maybe do research or maybe share ideas. So if you have any of those ideas you want to bring up, let's keep building in these times. So I think the folks you guys here, everyone on this call, we're not tourists. We're not leaving as as the times get bad. So happy that you guys all turned out today.
No, thanks to you, Houston, for organizing. Great chatting, and thanks for everyone's input.
Yeah, for real. It's appreciate you guys sticking around, and we have done these in a little while, but always fun to catch up and hear everyone's voice and see some faces. So with that, we'll wrap things up, and we'll see everyone on Discord. And Eunice will drop the link in the chat right now. All right.
Thank you.
Thanks.
Have a good
All
one.
right,
All right, folks.
Day, everybody. Bye-bye.
Bye.
See you. Talk to you soon.
Bye, everybody.
now.
Thanks.
Bye, Dina. All right, so we put this.
Bye, Houston.
Bye, Dina. So let me
Bye,
drop
Houston.
it right. See you later. keep saying bye.
Leave already.
No, I gotta drop this thing in the chat pod first.
Okay, bye.
You leave first. All right, so we get this invite here. All right, there it is now in the chat pod.